The final plan of President Putin is to become an emperor of a new USSR version 2.0. But how could it happen in the 21st century that one country with a nuclear status, with an overwhelming military presence in Europe, just decided to grab the territory of independent and sovereign country, and there is no response in the world?
All right, that sums up very well the current situation in Crimea. Crimea declared independence from Ukraine in the referendum that took place over the weekend and applied to rejoin Russia after its residents overwhelmingly supported the historic passage in a referendum. And today you've got the Russian Prime Minister saying that it is expedient to sign a treaty with Crimea and make it a part of Russia. How will this impact global markets? Well, joining us, Christopher Palmer of Henderson Global Investors. Chris, good afternoon. Can you explain to me why is it that global markets are looking at this as an almost positive event? So we had a triple-digit gain on the Dow yesterday after the results of that referendum came in, and it's almost as if markets are writing away any possible escalation in conflict, when in fact that seems to be exactly the case.
Well, good morning. The escalation hasn't really happened the way that perhaps the markets were pricing in last week. It does appear that this is going to be a protracted diplomatic and commercial battle rather than one which, we're going to see a clash of arms. The street scenes yesterday from Crimea, although they may have been largely staged, there was a real absence of any protest on the ground. And it does, in some ways, at least as people are watching media, point to the fact that this reunion of Crimea with Russia, where it for many centuries was part of Russia, was in fact very popular with the local people.
But Chris, we had yesterday the U.S. announce, even more sanctions against Russian individuals. This time, of course, not Mr. Putin, but a whole bunch of government individuals. The EU has announced travel bans and asset freezes on 21 people in Russia. So I get that there's maybe a less or a lower expectation of a military conflict, but this is going to be an issue on the burn for a long time to come.
Yeah, it is. I mean, there's no doubt about it. It will be more difficult for Russian companies to seal large deals in the West. There'll be more scrutiny. In many ways, this is going to be reminiscent of what the feeling was like in the 1990s when China was out trying to buy strategic companies in the U.S., and there were a lot of Congress got involved with blocking many of the deals. And I think we'll see similar things like that going forward. Clearly the agenda now has moved north to eastern Ukraine, and with very slowly the West trying to draw a line around those issues and draw out from the Russians what exactly their intentions are with regards to eastern Ukraine. I think the Crimea situation is probably a lost cause, but they'll focus more of their efforts on understanding what Russia's long-term intentions are towards the eastern Ukraine and overall Ukrainian sovereignty.
What do you expect from Mr. Putin when he speaks in a couple of hours from now, maybe in an hour from now, Chris? What will the markets be looking for? What will the world leaders be looking for? Will it be, as said, just a taper in Crimea and nothing more on eastern Ukraine? Could it be a little more?
Well, I think what Putin will want to do is leave the door open so that some legitimacy can ultimately be shed on the actions in Crimea. He will make references to Kosovo, I imagine, either outright or obliquely talk about the parallels to Kosovo. He'll probably talk about self-determination, which is still an important concept here. But what I think observers will be hoping for is that he takes the olive branch from the West, which is the very light touch sanctions which have been put in place, and understands that the door is open for a more full series of discussions and negotiations with all the parties in the regions about how to stabilize the Ukraine itself.
Krista, do you agree with the way markets have reacted to this, putting this event behind them? Because just 2 weeks ago, there was all this talk of, oh gosh, are we on the anvil of another Cold War? And now it seems as if, all military conflict or escalation has been discounted by this market, or actually, in fact, has been sort of put away by this market. Do you agree, or do you think the market's been a little too sanguine about what could potentially evolve here?
No, I don't think the markets have been too sanguine. I think that there's, somewhat, limited interests of the West in the deeper parts of the Ukraine, particularly in Crimea. So I think the governments themselves have taken a step back and have worked out strategies which are quite balanced about what everyone's actual commercial, diplomatic, trade, and cultural interests are in the region. Where overwhelmingly the balance seems to be in favor of Russia with regard to the Crimea itself. And the markets have probably marked to market the fact that this is not an issue worth going to war over. And there's still a lot of diplomatic work to be done in the Ukraine with regards to both the present Ukrainian government, its own legitimacy, and what kind of governance model will they be using within the Ukraine to keep eastern and western Ukraine as part of one country. Overall, I think what the markets are pricing in, and it may be early to say this, but perhaps the Ukraine emerges as a bit like Belgium, which is a compromise between two cultures which they've maintained their national integrity, but have to learn to work side by side rather than together.
So you'd say that the Fed meeting that gets underway today is by far the more important event that this market is looking at then this week?
Yeah, the market's moved on. They're more interested in the Fed and they're more interested in China. And I think this is not a sideshow, but it's something that we've got to leave to the professional, the diplomats, and to work out, longer-term solutions which are based, more on the stability of the region, some concepts of self-determination, which I think all nations are interested in to a certain degree, and really get more understanding of what's going on the ground there. There's a lot of polemic, there's a lot of media spin on all of this, and I think investors would rather just turn their attention to issues like the Fed, the outlook for growth in China, and the outlook for growth in some of the key markets.
So what are you expecting from the Fed, Chris? Gold is down about 1%, so that's a bit of caution there. What are you expecting?
I don't think they're going to change the pathway much. There is some talk that they'll be introducing some qualitative language in addition to quantitative language as the economy appears to be gaining some steam. They may be putting some more parameters around, how if the economy strengthens further, how they might modify pathways, but I think it's still premature for them to do that.
They might unhook the interest rate hike milestone from the 6.5% unemployment rate. Chris, do you think that's going to have a big impact on the U.S. Bond market or the U.S. Treasury rate at this point in time, the 10-year?
I think the bond market has become very comfortable with the Fed's recent language and where the unemployment rate is, so I'm not expecting any big changes today due to the Fed's what the Fed's going to be saying.
So it won't be a market-moving event in that sense, is what you're telling us?
Yeah, I don't believe so, because I think the Fed has been better at communicating in its last few meetings, and particularly in the coming into this meeting, and I'm not really expecting that there'll be a market-moving event today.
All right. Thanks very much for joining us there. You've got Chris Palmer of Henderson Global Investors talking us through both the situation in Crimea and the other more important news event of the week, which is the Fed meeting. Sandra?